In today's video, the primary focus will be on whether the era of the petrodollar will finally draw to a close. This question emerges because of the new flood in energy costs, which can be credited to the attack on Ukraine by Russia. As per the U.S. Energy Information Administration, the Organization of Petroleum Exporting Countries, OPEC, is set to produce $907 billion from oil exports this year, contrasted with a normal of $577 billion throughout recent many years. Subsequently, Capital Economics Matters gauges that Saudi Arabia and the United Arab Emirates, Qatar, and Kuwait will have a joint current record overflow of $409 billion, very nearly multiple times the complete of the year before. Additionally, Russia's current account surplus tripled on a year-on-year basis in 2022. During past petrodollar booms, energy-producing nations have utilized their excess profits by investing in the Western financial system. As an illustration, Saudi Arabia accumulated a current account surplus of $160 billion from 1974 to 1982. Nearly all of this amount was deposited in the euro market, which refers to dollar-denominated deposits held outside of the United States, like European banks or American lenders' European branches. These banks then loaned out the deposited money to countries such as Argentina, Chile, and other developing nations, which resulted in a surge of emerging market debt. In the early 21st century, there was a spike in energy costs. Fossil fuel producers took advantage of this and channeled the resulting profits into Western financial assets through central bank reserves and sovereign wealth funds. The oil exporting countries in the Middle East, and Russia in particular, increased their holdings of U.S. debt and equity securities by a massive $500 billion between 2003 and 2008. This represents a five-fold increase that was only surpassed in absolute terms by China and the Cayman Islands. Thus, there was expanded interest in U.S. stocks and bonds. In the past, oil exporters and wealthy individuals have invested in European soccer clubs and department stores. This practice was called petrodollar recycling and refers to the financial flows generated by Westerners spending on fuel. Essentially, this money eventually finds its way back into their economies through energy producers' investments. Recently, the Saudi Public Investment Fund, PIF, has expanded its operations with new offices in London and New York. During the summer, the PIF went on a buying spree in the U.S. equity market, acquiring shares in Alphabet and Microsoft. Additionally, the Abu Dhabi Investment Authority has hired Drew Goldman, a real estate investment expert based in New York, to lead their real estate investing efforts. It's possible that Western financiers who remembered the past may not be pleased with the spoils. The revenue, when adjusted for inflation, is smaller in comparison. According to data, the revenue earned by OPEC between 2010 and 2014 was higher than what they will make this year. The figure for 2022 shows that Saudi Arabia, the UAE, Kuwait, and Qatar's ongoing record overflow will be worth 1.6% of the US's gross domestic product. This is altogether not exactly the 2.5% it was in 1974. The estimations depend on information from Capital Economics, the Federal Reserve, and the Bank of England. There's a possibility that energy producers may decide to keep some of their profits in different places. Sanctions imposed on Russia, for instance, restricted from investing in US and European financial assets, even if it desires to do so. Additionally, the West's action of freezing Moscow's foreign exchange reserves may urge Gulf states to diversify their investments to avoid being in a similar predicament as Russia in the future. According to the data got from IMF, there has been a decrease in the level of worldwide national bank cash saves that are designated in dollars and euros. The information shows that as of WALC 2022, this figure had tumbled to 79% of the aggregate, which is a drop from 85% recorded 6 years sooner. OPEC member countries are confronting critical difficulties in diminishing their reliance on fossil fuel exports as the world moves towards environmentally friendly power. To address this, countries like Saudi Arabia may need to invest heavily in education to develop their services industry or in sectors such as solar power to bolster their manufacturing industry. However, the kingdom's reputation for human rights violations may hinder its ability to attract foreign direct investment, making the energy sector its primary source of funding. The International Monetary Fund expects the Public Investment Fund to invest more in local projects for the second year in a row, surpassing the central government's investments. Finance Minister Mohammad al-Houdan announced in May that the country would use its 2022 surplus to promote private sector investment. Despite these efforts, Saudi Arabia may struggle to make wise investments with its energy windfall. It is possible that Westerners could miss out on some benefits of the new petrodollar boom, but this may not necessarily be a bad thing for everyone. While banks, buyouts barons, and high-end real estate agents might be disappointed, previous cycles of petrodollar recycling have resulted in damaging asset bubbles. For example, the Latin American lending boom of the 1970s changed into the Latin American obligation emergency of the 1980s, with various nations incapable to reimburse their unfamiliar advances. In the years paving the way to the 2008 monetary emergency, petrodollar requests kept U.S. acquiring costs low, even as the Federal Reserve raised interest rates, which some contended added to the emergency. This reveals that massive financial flows, while benefiting middlemen in Wall Street and London, can often also destabilize the economy. It's possible that a quieter petrodollar boom might not be so bad, since it could disturb the US dollar's strong position in the world equity markets. One example of an interesting coalition among BRICS countries is the BRICS Stock Exchange Alliance. This initiative was started by Hong Kong Exchanges and Clearing Limited, HKX, in June 2010, shortly after South Africa became part of the BRICS group. In October 2011, stock exchanges in BRICS nations announced an initiative to cross-list benchmark equity index derivatives. This effort brought together several stock exchanges, including Brazil's BM&F Bovespa, Russia Moscow's Interbank Currency Exchange, HKX as China's initial representative, and South Africa's Johannesburg Stock Exchange. Additionally, the National Stock Exchange of India, NSE, and the BSE Limited, previously known as Bombay Stock Exchange, have both shown their support by signing letters of support and will join the coalition after fulfilling any outstanding requirements. In 2012, the Equity Market Alliance was endorsed by the BRICS leaders during the BRICS Summit. Also during the summit, the BRICS Stock Exchanges Alliance began cross-listing equity benchmark index derivatives that could be purchased in local currencies. The members of the BRICS Stock Exchanges Alliance planned 3 stages of implementation for the initiative during the summit. The first stage involves cross-listing benchmark equity index derivatives. This is aimed at boosting liquidity growth in the BRICS markets and enhancing the international position of the BRICS alliance in the global economy. The participating exchanges are offering benchmark equity index derivatives that are denominated in local currencies. In the second stage, members of the alliance plan to collaborate in creating new products that will be cross-listed on their respective exchanges. The third stage will involve further cooperation in developing joint products and new services. When the BRICS Stock Exchanges Alliance was established, its aim was not to de-dollarize, but its formation resulted in a move toward reducing the dominance of the US dollar in the global equities market. This announcement of the alliance saw the participation of 7 exchanges with a combined listed market capitalization of $9.2 trillion, a monthly equity market trading value of $422 billion, and a total of 9,481 listed companies. Additionally, these exchanges accounted for over 18% of all exchange-listed derivative contracts traded globally at the time. These exchanges are significant and rapidly developing equity markets that do not use the US dollar as their currency. Closer collaboration among them via cross-listing and developing joint products could lead to increased use of the local currencies of the BRICS nations in these equity markets. The BRICS Exchanges Alliance is attractive to investors both within the BRICS nations and those from other countries. The alliance between the BRICS countries allows investors within the countries to trade index futures and options for each exchange on their domestic market using their currency. This is beneficial for investors as they can avoid capital controls or currency risk. For investors outside of the BRICS countries, the alliance provides easy access to major equity index derivatives of the BRICS markets, offering an opportunity for portfolio diversification and exposure to the BRICS equity markets. The cross-listed financial products will not only increase the profile of the exchanges, but also lead to broader domestic and international participation. This, in turn, will increase the use of BRICS currencies in global equity markets and reduce capital traffic from dollar-denominated financial assets. For investors with existing exposure to BRICS economies, futures are essential for hedging and risk management, which is crucial for developing a robust financial ecosystem in the BRICS countries. There is an ongoing debate about whether the petrodollar's supremacy will come to an end. The recent surge in energy prices triggered by Russia's incursion into the Ukraine has resulted in substantial profits for oil exporting nations such as Saudi Arabia, Qatar, and the United Arab Emirates and Kuwait. However, the returns may not be as substantial as in prior petrodollar booms due to relatively smaller amounts, possible diversifications of investments, and significant domestic investment demands. Conversely, the BRICS Stock Exchange Alliance represents a stride toward decreasing the US dollar's predominance in the global equity market. It enables investors to easily obtain critical equity index derivatives from the BRICS markets and facilitates the broader use of local currencies from BRICS in the global equity market. It's unclear how these advancements will impact the petrodollar's future and the overall global financial system.